Good morning. This is Japanese Economic Review Channel. Today we review yesterday's market activity from Tuesday, April 28, 2026. While the headline news focused on a sharp Nikkei drop of nearly 620 points, this was largely a statistical illusion. Despite the index-level decline, over 80% of prime market stocks actually advanced. Yesterday's session was characterized by a steady Bank of Japan and record highs in the Nasdaq, which together masked the underlying strength of the broader Japanese market. Yesterday revealed a significant divergence between indices. The Nikkei 225 fell to 59,917.46, its first drop in 3 days, primarily due to heavy selling in high-weight tech stocks. Conversely, the TOPIX rose for a third consecutive day, closing at 3,772 points. In the US, a similar split occurred as the Nasdaq reached a record high while the NY Dow fell for its third day. Currency markets also saw heightened volatility, with the yen hovering near 159.39. Looking at the US lead-in to yesterday's session, the Nasdaq was propelled by strong earnings expectations for Nvidia and Micron Technology. Sentiment was also boosted by reports that Iran had sent new peace proposals to the US via Pakistan. However, this optimism did not lift the NY Dow, which was dragged down by declines in old economy giants like McDonald's, Walmart, and IBM. This set the stage for the tech-heavy selling we saw in Japan later that day. The primary catalyst yesterday was the Bank of Japan's decision to hold its policy rate steady for the third consecutive meeting. This led to immediate intraday yen volatility, with the currency spiking into the 158 range. This sudden shift caused the Nikkei to plunge to an intraday low of 59,701 by mid-afternoon. However, by the closing session, selling was exhausted, and the index recovered slightly to finish above 59,900. The decline in the Nikkei yesterday did not reflect the health of the wider market. Because the Nikkei is price-weighted, it was disproportionately pulled down by heavy selling pressure on tech giants like Advantest and SoftBank Group. Meanwhile, the market cap-weighted TOPIX gained 36 points. This confirms that capital was aggressively rotating out of overvalued tech stocks and into value and cyclical sectors. Market breadth yesterday was exceptionally strong. On the Tokyo Stock Exchange Prime Market, 1,288 stocks advanced while only 249 declined. This means over 80% of the market ended the day in the green. Trading volume was also robust, reaching 9.48 trillion Japanese yen. These figures prove that yesterday's sell-off was limited to a small group of influential stocks, while the vast majority of Japanese companies saw gains. Yesterday saw a massive rotation to value. Out of 33 industry sectors, 30 advanced while only 3. Information and communication, electric appliances, and air transport lagged. Major gains were recorded in financials, such as MUFG and SMFG, and infrastructure companies like TSE and Shimizu. Energy, shipping, and wholesale sectors were also firm, indicating a broad-based shift toward tangible assets and interest rate-sensitive sectors. In the emerging markets, the Growth 250 index rebounded yesterday after a 4-day losing streak, suggesting that short-term selling pressure has been exhausted. Risk appetite returned for specific names. PowerX climbed past the 10,000 Japanese yen mark, and Astroscale saw significant interest. While some recent IPOs like Inuneko Seikatsu faced selling, the overall sentiment in the growth sector showed signs of stabilization. Several corporations announced major strategic moves yesterday. Shimadzu acquired a 75% stake in a German startup to bolster its global position, and Nissan unveiled 2 new SUV concepts in Beijing. Mitsui O.S.K. Lines, MOL, received 2,500 tons of carbon removal credits from a project in India. Additionally, brands like Matsukio and Unicharm announced new product and packaging strategies to deepen customer engagement. In summary, yesterday's market was defined by 3 dynamics. First, an aggressive rotation from tech into value and cyclical stocks. Second, a hypersensitivity to central bank policy that triggered currency-driven volatility. Finally, a resilient underlying market where 80% of stocks advanced, despite deceptive headline indices. Corporate fundamentals remain highly robust as we move into today's trading session. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.